there. But let's in fact now talk about the larger markets. I understand that Shailendra Kumar, who's Director at Narnolia Financial Advisors, is going to be joining us for this. Very good afternoon to you, Shailendra. How are you reading the markets as they are today?
Surely after Nifty being in a range of 11,100 and 10,500, we have seen a kind of a breakout, say 10 sessions back in the market. And this breakout looks pretty solid. After a long time, we have seen small cap and the mid cap doing better than the large cap. And there surely is a leadership in this breakout. So Nifty Bank has already made an all-time high. So that clearly tells you this market breakout that has happened has good amount of steam inside it. Having said that, say 800 points of rally over 10-12 trading session naturally requires some kind of a profit booking or some kind of a readjustment in position. But all the kind of element which is there in the price movement right now, in terms of the breadth, in terms of the leadership, in terms of the kind of defensive sector like FMCG and IT not doing so well. So all these are giving you a classical sign that the breakout has happened and this breakout is for real. Naturally, we will try to go inside and retest maybe once, particularly if the range remains hold or not. Looking at all the global issue going on and all the election uncertainty which will kick in, maybe a good opinion poll, say 10 days back, trigger this rally. Maybe some opinion poll saying some kind of a vote percentage losses here and there can trigger another kind of a correction in the market as well. But market is showing a very strong foundation, good leadership. So the chances of somebody, investing in the market, even at current level or maybe some decline, the investment case remains very strong.
You think there is a breakout underway and there are opportunities definitely when the markets do break out. But at this point in time, how do you measure the risk-reward ratio, especially the kind of run-up that we've seen in the banking space? Look at one of the top gainers on the Nifty today. It is Yes Bank. The stock has seen some gains of more than 2 percentage points, more than 2.5 right now. Deutsche Bank, for one, is increasing its target price for Yes Bank from what was 280 rupees. They've increased it to 300 rupees a share. They've maintained a buy rating on Yes Bank as well. Vandita is here to walk us through that report that Deutsche Bank has put out. What exactly are they saying about this counter and what it thinks they are going to do in times to come?
Right. So, Yes Bank has gained nearly 40% in last 1 month, and Deutsche Bank is bullish on Yes Bank. They have increased target price to 300 rupees from 280 rupees with a buy rating. Now, this implies nearly 20% potential upside from the current market price. According to Deutsche Bank, things are falling in place for Yes Bank, like new CEO in place, a nil divergence by RBI that's lending comfort on asset quality. Yes Bank has been through various tough phases, and Deutsche Bank now sees stability returning for the bank. They're expecting the corporate loan growth to slow down for Yes Bank to 12 to 15%. This lower loan growth will allow the CASA ratio to improve and thereby will likely improve the overall funding mix, and eventually bank's net interest margins will improve, which is a key measure of profitability. They said in their report that over the past 2 years, Yes Bank has witnessed several challenges and now they're set for a more normalized trajectory. Few challenges do exist, like capital raising, rebalancing loan book towards retail, but according to the research firm, bank is well positioned to address these quickly. For investors here, strategists of Deutsche Bank have done their calculation. In this context, valuations are quite reasonable. Valuations at 1.7 times financial year 20 price to book ratio looks fairly attractive on risk reward. The research firm also expects the new CEO of Yes Bank to start addressing key regulatory and investor concerns going ahead. Execution will remain key for transitioning towards a retail book. But overall, Yes Bank has managed the current liquidity crisis well, and with perceptions set to get better. Deutsche expects valuation to pick up and is bullish on India's 4th largest private lender bank, Yes Bank.
Vandita, thanks very much for walking us through what Deutsche Bank makes of Yes Bank and the kind of targets that they are setting right now. But even while you're speaking, I'm reminded of markets midday only yesterday. At around the same time, we saw a sudden surge in Yes Bank. And right now, I'm seeing IndusInd Bank having hit a market cap of 1 lakh crore rupees. It has hit that market cap yet again, and that's the stock that is moving up very, very strongly in trade. 2.5 percentage point up move coming in on that front too. Shailendra, want to get your perspective on Yes Bank. As far as recent news flows are concerned and the way the stock was reacting, it would come across more like a trading opportunity. But do you think that there is an investment play now at current levels in Yes Bank, or do you think that the choices or the better choices lie elsewhere in the private banking universe?
Yeah. See, the kind of rally we are witnessing right now in Yes Bank or IndusInd Bank, is it again a typical sign? So you saw ICICI Axis doing quite well in the last couple of trading sessions, and the follow-up buying has come in this mid-cap in the private sector bank. Also, with the management transition happening inside Yes Bank, things appear better in terms of regulatory issue with the bank. Having said that, the kind of liquidity scenario which is there in the economy right now, something like a Yes Bank, which has depended more upon the bulk deposit than the retail deposit, surely will have some kind of a problem going forward in terms of getting its deposit inside the bank. So let the liquidity remain become little more better in the macroeconomy before we can take a very definitive call whether the Yes Bank has exhibited a very high risk, high reward kind of a movement over last say year because of a lot of issue. Right now also the element of risk that I don't see has completely gone out of the bank till the liquidity remains tight in the economy. So once the liquidity stabilizes, then the name like Yes Bank will be a very stable stock back in the market.
All right, fair points there. Let's also talk about the fact that we're looking very closely at what's going on with the Z Entertainment today. Take a look at that, pull up that stock for us. The stock very much buzzing. This is on reports that the company is looking to sell about 20% of its stake to media giant Sony Corporation for 13,000 crore rupees. Sony Corp is in fact in advanced talks to buy the stake in Z Entertainment and form a strategic partnership. The chairman of SL Group, Subhash Chandra, wants a 30% premium and also seeks to retain 20% holding of this company. Shailendra, interesting developments that are taking place there. Any reaction you have to this, as well as the kind of, I guess, strategy that is being employed here, and any recommendations you have within the media universe?
Yeah. See, media is a very interesting space right now for investment. We as an Indian is going to, consume more media in future, not less at all. Of course, the medium through which the media will be consumed will keep evolving as it is right now. With this G Entertainment, the promoter is already on record that they are trying to sell through the stake to get the liquidity position better. So any kind of a development on that account surely will be soothing to people who are already there invested in the GS stock. The only, because on the OTT kind of a platform, with G selling its stake to some foreign entity, the only missing thing to me as an Indian is like there will not be any Indian promoter which will have a huge amount of stake in the OTT business, which is the media of the future. So I think that's the only negative as an Indian. But for the stocks, surely it will be stabilizing. G has a huge amount of content for Indian diaspora across the globe. So as a business, it remains a very nice franchise for anyone to own and anyone to own for investment as well.
So that's an interesting take on the media pack. As far as subscription money goes, and indeed what they hope to gain from the advertising revenues, all of that is making media an interesting space right now, considering consumption at all levels in the domestic economy has gone up quite substantially, and there is scope for further growth on that front. Z Entertainment in talks and advanced talks at that with Sony Corp definitely makes it a stock to watch out for in trade today. 0.4 percentage point gain coming in on Z. We're also considering the pharma pack today, which is up on a day that we are seeing subdued trade on the large street. The pharma, the defensive play, is moving up around 0.8 of a percentage point, and within that, Piramal Enterprises, Sun Pharma or Aurobindo are the ones that are making gains. The pressure is coming in from stocks like Dr. Reddy's, from Glenmark, from Biocon as well. But Lupin is another stock that is in focus because the US FDA has said that the pharma major is now going to be subjected to regulatory action for its Mandideep unit in the state of Madhya Pradesh. We had a chance to speak to Nimish Mehta about it. Nimish Mehta, of course, is the founder and director of research at Delta Advisor, and he says there should not be any financial implications from this development, from what the US FDA is asking of Lupin, but he's still not very positive on the stock. Here are his comments.
The company has mentioned in the last call that this is reflecting some of the old products that they manufacture out of it. So to that extent, directly speaking, this should not be having any great impact on the financials, other than the fact that the company might have to undergo certain kind of remediation procedure, which might delay some of the sales or disrupt the sales. And OAI practically works like a warning letter because it stops all the new approvals. We are still not positive on the stock given the fact that they do not have a great pipeline.
So now this is pressure that's coming in on Lupin from the US FDA front, and you just heard from one of the experts who's been tracking that sector. Shailendra, I want to get in your perspective as well. What do you make of pharma as a pack and some of the frontline players which have seen we're not completely out of the woods when you talk about US FDA concerns. So how do you pick in that case?
See, US FDA remains a hangover to all the pharma names. The idea is, this kind of a rally that we're seeing in the Nifty Pharma Index for a couple of days right now, because some news flow has come because a lot of complex generic opportunities there, some 70 names with good amount of dollar revenue waiting to be tapped. But US FDA issue is not going to go in hurry with the new regulator name coming maybe shortly. I don't think things are that green. Of course, the valuation being so attractive for most of the larger pharma name that we are seeing kind of a bounce back in those names. I think safety remains in those pharma which has more domestic exposure, which has good amount of pipeline in terms of domestic medicine coming out. Something like a Alembic or name which are more focused on the domestic side looks more secure or low risk kind of an investment bet in pharma than those who are more dependent upon the US market.
All right, away from that, let's also focus on the realty pack because those realty stocks are holding on to some of their gains. Take a look at what's happening within India Bulls Real Estate, DLF, as well as Sunteck Realty, all trading with gains and leading the index higher. Business Television India had a conversation with Rajiv Talwar, who's CEO at DLF, who basically believes that input tax credits should not be allowed to lapse on the 1st of April for under construction housing. Listen into that conversation.
All input tax credits already available. That means they are to the credit of the builders and real estate developers as of now, as of 31st of March 2019, should not be allowed to lapse. Maybe the government can give a 5-year window and say that in case they can be used in anything which is permissible, they should be allowed to use. But if after 5 years there is no solution possible, then they should be allowed to lapse. It's just like any tax. If any tax is payable by any person, it is not allowed to lapse. The government, whether state or local authority or the central government, can always say that this tax was payable and therefore should be made good. Similarly, any credit which was available and is to the credit of the firms or product developers like real estate developers should be kept pending or should be given a window of 5 years. Because this is a very dynamic situation, it's a transition credit. In this dynamic situation, because it's an evolving process of GST, let us see how it develops in future. And to that extent, there should be an assurance that this tax already paid as GST by real estate developers and not taken credit for would not be allowed to lapse.
But regarding this situation that comes into effect from April 1, how do you see the impact on the prices? Do you see the real estate prices actually coming down?
Ma'am, my personal view is that the jury is still out. Because on the one hand, it has been made very comfortable for the buyer that they charge only 1% for affordable housing and 5% for any other kind of housing which is payable, and therefore it's an easily calculated amount, and for the buyer it is a very good system. But I think the fact that input tax credit is not going to be allowed, that still we have to see the experience of the next 1 year or 2 years, because the great reform of GST, which is perhaps the biggest reform in taxation ever since independence, was based on the fact that there is a link and a chain which is being built. For every tax paid, there is already a built-in system of input tax credit, and that chain keeps on passing on till the product is finally delivered. I think being told now that no input tax credit would be allowed, but 80% of the goods will still have to be bought from registered dealers of GST. Now that is a good provision. But the fact that no input tax credit will be allowed, I hope that it does not lead to any misuse or malpractice.
Really interesting conversation that was had with Rajiv Talwar there, also really highlighting the kind of issues the sector is looking out for when it comes to policy as well. But Shailendra, just want to come to you on the realty pack itself. Any sort of strategy you sort of recommend, or do you feel that it is still a very difficult landscape to navigate?
Real estate used to be a very difficult space for somebody to make investment for last 7-8 years. But I think post RERA particularly and GST as well, this sector provides good opportunity for wealth creation over say next 5-10 years, because the kind of transparency which is coming in the books of these real estate company and the kind of visibility we can see in terms of conviction on the cash flow generation of these reality improves. But investors need to understand reality is not a sector to be seen as an overall, but you have to look for various company catering to various macro markets. So a company which is catering to say NCR market, the other maybe in a Mumbai market and a Bangalore market, and the real estate company will be very different in terms of the way you will be computing its future. The idea is look for company where the balance sheet is light, and number one, see, look at the NCR players. They have huge amount of land bank kind of evaluation built inside their balance sheet. And naturally, that's a difficult space for a professional investor to buy into. But a player focused on a Bangalore market or a Mumbai market and with a light balance sheet, that space surely will see very continuous and consistent cash flow improvement over the next 5 to 10 years. That's our take on. So this space is very interesting, but you have to pick the stock very carefully here.
Yes, how do you pick stocks carefully in the realty space where most of the companies seem highly leveraged, but then again, we have been suggested by other experts in the past, whether it's stocks like Godrej Properties or an Oberoi Realty as well, but we'll have to see. 5-10 years is a considerably longer period of time. Today, of course, realty is the top sectoral gainer, 2.5 percentage point gain coming in, led by the gains on an India Bulls and a DLF. India Bulls by as much as 7.5 percentage point. So we'll keep tracking the realty sector, and Shailendra, always a pleasure having you on Markets Midday, and we'll reconnect with you in the near future. Meanwhile, the Central Board of Indirect Taxes, since we're talking about the realty space,